Hi everyone, I'm happy to be back here with Steph today, and I was thinking about what we should talk about today, and I thought most of you are either getting your 1099K or you already got them because they were due by January 31st. What is a 1099K? That is a form that you're going to get from either the credit card or the payment processing company that you use when you accept credit cards. So anyone that has 20,000 or more or has 200 transactions during a year, they are going to get a 1099K. So what happens with this when you get the 1099K? Lots of people are like, oh wow, I can't believe I have 50 or 60 or I sold so much. I didn't think I did that. Well, one of the first things you have to do is check the form. Make sure that everything there is correct. Make sure that your name is correct. Sometimes it has your name and your social, yet you were operating under a LLC or under an S Corp or under a partnership. Check all that. If there are things that need to be corrected, this is the time to do it before you do your tax return. So it's important to check the information. Also, if it says that you made 100 and you only know that, hey, I only got in my bank 20,000, well, there's a mistake. So you have to go back to your bank statements and your credit card statements, and you have to resolve it, because guess what? When you got this 1099K, the IRS had it before you got it. So when you file your tax return, they're going to be expecting that at a minimum, the amount that's in there for revenues is going to be in your tax return. Gross revenues. Those are the amounts that you sold. Now, there's a couple of other things that may come up. Let's say that you had a business and your friend started a business and she or he were using your credit card terminal. Because, I don't advise that, but sometimes that happens. Your sister, your brother. So there are two entities that are part of that. Well, you're not going to want to pay for the taxes related to someone else that are not your transactions. So there's a couple things you could do about that. Either you can yourself, that entity or yourself that got this 1099K, you can what you need to do is you need to issue that other entity their portion of those revenues, either as another 1099K or as a 1099 miscellaneous, so that the other person now is going to have the revenues related to their business. And in turn, when you issue that, that's going to be an expense or a reduction in your taxes. Because if you, between the two of you, you sold 80,000, but 30 belongs to your sister, then she should have her own recording. And all that reporting has to be done, of course, with the IRS, so that they have, XYZ got a 1099 for 100, but only 80 belong to them. And then there's another 1099 that goes to ABC company, and that's a deduction in XYZ. So all these things, they need to be handled right away, because you want to make sure that the person that's supposed to report those revenues is reporting them, and that you don't end up having to pay taxes on that. Now, it's important to also mention some other things that are important for this. You have to make sure that if you are a business that has a retail space, that you don't, there's some people that come and say, oh, that's all I made, the credit card. Well, you can't be like that, because if your business is open and you receive cash or checks and you put this in your bank account, or there are records that you have a POS, the IRS is going to want to know all your sales, not just that's on the credit card statement. So you have to make sure that you keep good records to be able to substantiate your sales. Now, there's another item that's important too related to this. If you buy, sell a business, you have to check this 1099K really well, because if you bought the business from someone and you continue to use the same credit card machine or servicer and you didn't inform them, guess what? Either you or them are going to have revenues, or both of you may have revenues that belong to one or the other. So it's important that if you had some kind of a transitional year, that you have records and that you check this 1099K correctly. So that's very important too. If you change your structure, if you were a sole proprietor and then you went into an S Corp during the year, but you continue to use the same processor and never inform them, then you're going to have a little issue there too. So you're going to have to dissect this 1099K and make sure that the correct amount is in the correct entity. Sometimes they're just wrong. Sometimes, you know, there are mistakes. So that's why it's important. I've had some of my clients come and say, you know, they reported 100, but I don't have it. So you have to make sure that that it was yours. Now, they're going to report to you their gross revenues. So what you're going to have to do after is come up and say, okay, I had these revenues, but guess what? The credit card servicer charged me such and such. So then you have to make sure that you put the expenses for the processing of the credit card along with all your other expenses. Now, some people, they use this, they get a 1099K PayPal, but they use their PayPal to also pay expenses. So there it becomes a little more complicated. Sometimes Stephanie has that. It becomes complicated because now you may have sold in 1 month $2,000, but your bank only received $500 because you decided you're going to pay something you purchased for the business, or pay your gas or pay your cell phone out of your PayPal. So then the record keeping becomes really, really important. And the best way to do that is monthly, so that you don't end up at the end of the year with having to spend a lot of time trying to figure all this out. One suggestion as a business owner myself, and I know it's hard because you're a business owner, you're everybody. You're the person putting the stamp, going to buy, especially when you're a small business. You're the person doing everything. But you know what? You have to set aside during the week at least 1 hour for putting together the administrative part of your business, because otherwise you will pay for it later. And not only that, but that is the 1 hour that you use to say, where is my money going? Where am I spending my money? Should I be, you know, doing this a little bit differently? So 1 hour to put together what's coming out of your PayPal, how much money did I get? 1 hour, and I would say you have to do this a week, not even a month. 1 hour a week. That's, you know, 4 hours a month. You have to spend it on analyzing your business, analyzing your transactions, putting together your documentation, so that at the end of the year you have this all set up. So this is it for our information today. We're going to be trying to do these once a week, especially, or once every 2 weeks, especially since we have tax season. In the meantime, if you need any help, please call us, email me, whatever you may need, so that we can try and help you. I know this is a very critical time trying to get your taxes and figuring out if you owe taxes or not. Thank you so much, and I hope you guys enjoy this video. Okay. Hi everyone. Wait. I want to see the time.
Oh, that's right.
Because I don't want to talk too much. What's it? Oh my God, start it again.